So just take your 2 minutes, and in 2 minutes we will resume. So today we will try. So today we will try to cover most of the portion of the economic growth, and if something is left due to the paucity of time, we will continue the same in the next class also. And I will try to keep the entire class bilingual so that most of the people are able to understand the things in either of the languages that they are comfortable with. And I hope you guys don't have any doubts from the previous class. In case you do have, you have 1 minute and you can unmute yourself and ask the doubt. So great, let's just begin the class then. So today we are going to cover the theme of economic growth. It is very, very important for the UPSC examination. Both in prelims as well as means, we see a number of questions from this particular area of the examination. The concepts of GDP, the concepts of depreciation, stock flow, domestic territory, geographical territory, everything is associated with this particular area of economics. So firstly, here we will cover the concept of factors of production. Now, what are factors of production? In order to produce any good in the economy, in order to produce any service in the economy, we require different materials, we require different people. For example, we require land in order to set up a factory. We require people in the form of either labor or in the form of entrepreneur, right? Then we also require capital in some form in order to carry out the activities. So, what are these things? The land, the labor, the people, the entrepreneur, the capital. All these are known as factors of production, or they're also known as factor inputs, because these are essential in order to carry out the production easily in a very holistic manner. So do remember there are two terms for these four items: land, labor, capital, and entrepreneurship. That is factors of production and factor of inputs. Similarly, for each of the factor of production, the owner, for example, if hires a labor, has to pay wages to the laborer. If he takes a land, he has to pay the rent for the land in order to carry out the production. For the capital that he invests, he gets some amount of interest on that. And as an entrepreneur, he himself gets some profit, right? For everything that is contributing something for the production process, there is a return that they are getting. So these returns are known as factor incomes. Factor income is also known as factor payment. So there are again two terms that is used for this. Do remember. Factor payment. So what are factor incomes or factor payments? They are simply the wages, the rent, the interest, and the profits. So these are simply the returns that the factor inputs earn for the services they are providing. So this was very essential to the whole idea of production, because for any production process uh, to provide the essential commodities, these four things are very, very necessary for any business setup, for any service setup. You would see such basic necessities. Now there comes the concept of stock and flow. A few years back, there was a direct question in the prelims examination regarding which of the following items are stock and which of the following items are flow. So if we talk about stock, stock is anything that can be measured over a specific point of time. So here the specific word is very important. If you can measure anything at a specific point of time, that is a stock. For example, if we talk about machinery, or for example, uh, if we talk about the money supply of the economy, the money supply of any economy is measured over a point in time. For example, the forex reserves of the country, forex are foreign exchange reserves. We'll see in the upcoming chapters, they are also measured at a point in time. They're not measured over a period of time. They're measured at a point in time. Similarly, unemployment. Do remember all these examples because they can be a direct question in the prelims examination. So machinery, money supply, forex, unemployment, all these are measured over a specific point of time. But when we talk about flow, it is measured over a period of time. Now, what do we imply by period? What does this keyword mean? Period means that there is a starting date and then there is also an ending date. That means if we are measuring anything in flow, we are measuring it over a period of time where we know the period. The period can be 2 months, the period can be 4 months, period can be 8 months, a year altogether. For example, we measure the GDP of a country over a one accounting year, right? Similarly, we measure the imports of a country for a particular point of time. We measure the exports of the country for a period of a time, imports over a period of a time. For example, the period of 1 year of imports, the period of 1 year of exports. Investments of the country are also measured over a period of a time. That the investments that were done by the Indian citizens in the economy over a period of time were so and so. So, in simple terms, stock को हम एक specific point of time पे measure करते हैं. मतलब मैं पूछूंगी कि आज कितनी अनएम्प्लॉयमेंट है, आप मुझे बताओगे आज का डेटा. हमें कुछ लेना देना नहीं है कि पिछला कितना अनएम्प्लॉयमेंट था. बट फ्लो को हम एक टाइम पीरियड के ऊपर मेजर करते हैं. फॉर एग्जाम्पल, 1 साल, 6 महीने, क्वार्टर, 2 महीने, 1 महीने. फॉर एग्जाम्पल, जीडीपी ऑफ इंडिया क्या थी ओवर द ईयर ऑफ 24 एंड 25. या पिछले 1 साल के इंपोर्ट्स कितने थे, पिछले 1 साल की इन्वेस्टमेंट कितनी थी. सो दिस इज द कॉन्सेप्ट ऑफ स्टॉक एंड फ्लो. नाउ देयर कम्स द मोस्ट इंपॉर्टेंट कॉन्सेप्ट, that is the GDP of the nation, that is also known as gross domestic product. Now, what is gross domestic product? You need to remember 4 keywords. It is the market value of all the final goods and services that are being produced within the domestic territory of a country, again during a specified period of time, and that specified period of time is usually 1 year. So that specified period of time is usually 1 year. So there are 4 keywords that you need to know in the gross domestic product. Firstly, it is the market value of all the final goods and services that are being produced within the domestic territory of a country during a specified time period. That is usually 1 year. Now here we need to understand each and every keyword. Firstly, The time period that we take for GDP is usually a accounting year, also often referred to as a fiscal year. An accounting year is from 1st of April of any given year till the 31st of March of the next year. So that is known as the accounting year. So specified period is usually an accounting year in the case of GDP, and this accounting year is also called fiscal year, that goes from 1st of April of a given year to the 31st of March of the another year. Now, why we have used the term final goods and services? It implies that we won't be including any intermediate goods in the calculation of the gross domestic product. Now, what is intermediate products? Intermediate products is any product in which some value addition is yet to take place. For example, if I am taking bread in the calculation of the GDP, if I'm taking the product called bread in the accounting of the GDP, then I won't take the flour that was used in order to make in the accounting of GDP, because then it will lead to what is known as double counting. What is double counting? We have added the same term twice. So if I am directly taking bread's value in the calculation of the GDP, I won't take the raw material used, the intermediate goods used in the production of the bread, example flour, because it will lead into what is known as the phenomenon of double counting. Do remember, very important, there can be direct statement whether intermediate products are used in the calculation of GDP or not. They are not used. Second, what does gross mean in GDP? The term gross. Gross means that we have not accounted, we have not yet accounted for depreciation. That means we have taken the value as a whole, हमने उसमें से depreciation की value को अभी तक deduct नहीं किया है, minus नहीं किया है. तो gross value whole value होती है, जिसमें से जब हम depreciation को deduct करते हैं, when we subtract the depreciation, we reach to what is known as net. But gross domestic product means we are just taking the gross value. We have not accounted for depreciation yet. We have not yet arrived at what is known as net value. Now there is again one more term that is known as the domestic territory that is used. Now what is domestic territory?
Excuse me, ma'am.
Sure, Lavanya, speaker.
Ma'am, can you remove this chat Google Meet help from the screen?
I will do it. Okay. Yeah, I got the option. Is there an option somebody can help me with?
Yes, ma'am. Once you minimize this, no, you'll see a cross on it. Just click on it and you'll see a cross. Yeah.
Yeah, so
The right
okay,
side.
perfect. Thank you.
Yeah, no problem, ma'am.
So
Thank you.
when we talk, you're welcome, Lavanya. So when we talk about domestic territory, firstly, political frontiers of a nation are a part of domestic territory. What do I mean by political frontiers? For example, if this is India, pardon my drawing, I'm really bad at it. Yeah, if this is India, so all these borders of India are political frontiers of India, including the Andaman and Nicobar Islands and Lakshadweep, obviously. So firstly, domestic territory includes political frontiers. Then it also includes territorial waters. The territorial waters of the country are from baseline up to 12 nautical miles. I think you would have studied that in geography already, that there are territorial waters. The territorial waters is from the baseline of the country's border up to 12 nautical miles. That is also part of the domestic territory. Third, we have what is known as ships and aircrafts. They are also counted as a part of the domestic territory, but only those ships and aircraft that are being run by the Indian countrymen between two or more nations. So if there is any ship, there is any craft that is operating between two or more nations, but is being operated by India's countrymen, then it is a part of the domestic territory of India. For example, if Air India is, conducting the flights between India and Australia, because Air India is being owned by the Indian countrymen, so it is part of India's domestic territory. Similarly, floating platforms, fishing vessels, oil and natural gas, or any rigs, natural gas rigs that are operated again by the Indian nationals anywhere will be part of India's domestic territory, and thereby it will be a part of India's GDP. Again, the military establishments, the Indian embassies, consulates, etc., would be part of India's domestic territory, even if they're located in any other country. Even if there is a Indian embassy that is located in America, Ukraine, Russia, wherever in the world. But if it's an Indian embassy, it's an Indian consulate, it is a part of India's domestic territory. So do remember, India's domestic territory is not just about the political frontiers, it is also about the territorial waters that is up to 12 nautical miles. It is about ships, aircrafts that are run by the countrymen. It is about the floating platforms, fishing vessels, oil and natural gas rigs that are operated by the nationals. It is also about the military establishments, the embassies, the consulates that are located outside India, you would be knowing the EEZ, which is up to 200 nautical miles from the baseline, where India has won the rights, the production rights. Yeah, pardon?
Ma'am, you were not audible in the middle.
Middle. Can you tell me from the part, which part I
Yes,
was not
ma'am.
audible?
After military establishments and embassies and consulates, you were not audible after that.
Okay, okay. Just uh, let me set the audio once again in a second. Just give me a minute. Okay. Am I perfectly audible now?
Yes, ma'am.
Perfect. So after the military establishments, embassies and consulates, do remember that there is one more thing that is part of the domestic territory. It is the EEZ. EEZ is exclusive economic zone. Again, a part of the concepts that we study in geography. Exclusive economic zone. It is from the baseline up to 200 nautical mile. In this particular area, if India has got any exploration rights, any rights over the marine resources through a particular project or something, that is also a part of our domestic territory and thereby used in the calculation of the GDP. So in the EEZ, that is from baseline up to 200 nautical mile. If India is carrying out any excavation activity, India has one right over any mineral exploration, any production activity, that would be a part of the domestic territory of India and thereby the part of the India's GDP. So that is the concept of domestic territory as a whole. Now let's see few questions that can be used to understand the concept of GDP better. You guys can unmute your mics because you guys have to answer these questions. It will also test your previous knowledge that you would have studied till now. Can somebody tell me whether consumer goods are only used in the calculation of the GDP or whether capital goods are also used in the calculation of GDP? Anyone?
Ma'am, both are used
Hmm. And what's the criteria?
differently. If we take the formula for GDP CIG, so
Hmm.
C has consumer goods and I has investment goods where capital goods come into place.
Perfect, perfect. Very good, very good. So she has perfectly answered the question. We would be approaching the concept of the formula of GDP soon. But in the calculation of GDP, both the consumer goods and the capital goods are used in the calculation. But the only thing is they need to be final goods and they can't be intermediate goods. So final consumer goods and final capital goods are used in the are used in the calculation of the GDP. Now, consumer goods are the goods that are simply consumed by the consumers, but capital goods are those goods which are used in the production process in order to produce the consumer goods. The example of capital goods is machinery. Machinery is a capital good that is used in the production of consumer goods. And you would be knowing an ample of example of consumer goods. There are multiple of them. The various food products that you consume over the day or the clothes that you wear, all are examples of consumer goods. But the machines that were used in the production of those food items, of those clothes, they're all capital goods. Both are used in the calculation of the GDP, but they have to be final and they can't be intermediate goods. Okay, next question. Are externalities accounted in the calculation of GDP? Firstly, what is externalities? And the second question is, are they counted in the calculation of GDP?
Ma'am,
Anyone?
can you repeat the question? Sorry, I my network is
Yeah,
a
sure.
bit low.
See, the question is, firstly, what is externalities? And the second question is, are the externalities accounted in the calculation of the GDP?
Ma'am, externalities are not calculated in the GDP. And to
Right?
answer the first question, externalities are basically the byproduct of GDP. So it can be positive,
Byproduct.
negative, both.
Yeah, good. Very good. So she has answered the question very aptly. Externalities refer to the more precise word would be unintended consequences. Unintended consequences that can be either positive or negative, and they're not accounted in the calculation of GDP. So if I have to explain you externality, for example, if there is a thermal power plant in the vicinity of the area. Thermal power plant is directly, whatever value thermal power plant is adding in the country's growth, the value is directly accounted in the calculation of GDP. But what about the pollution the thermal power plant is causing in the vicinity area? That is not accounted in the GDP. That is known as negative externality. It is not accounted in the GDP. However, the thermal power plant is also leading to what is known as, you can say, employment creation for laborers in the nearby area. That is the positive externality. That is also not accounted in the GDP. So externality simply refers to the unintended consequences of any activity. Unintended consequences can be either benefits or can be the negative side effects, as we have seen in this case, and they're never accounted in the GDP. Then what about barter trade? Is barter trade used in the calculation of GDP? Is barter trade used in the calculation of GDP? Anyone? What happened, guys? You haven't revised?
I guess it should not be there because the real flow is taken.
Yeah. No, barter trade is not accounted because there is no monetary transaction involved. For calculation of GDP, we usually account for the activities where a proper monetary transaction is involved. And that's the reason the barter trade is not accounted for in the GDP. For example, um, if you tend to exchange any product with your friend, for example, you and your friend are exchanging food items, lunch during your school hours or during your college hours, they're simply not accounted in GDP because no monetary transaction is taking place. But in the same lunch break, you would have bought something from the school canteen or from a shop nearby. For example, you have bought a fruity for rupees 20. That would be accounted in the GDP because there is a proper monetary transaction. So barter trade is not involved in the GDP. Similarly, if a homemaker, for example, our mothers tend to provide us various services in a single day, from cooked food to whatnot, yet because there is no monetary value associated with it, because they are not paid in monetary terms. That's why their services are also not accounted in the GDP calculation. So these are the important questions you need to know. Also, one more question. There is something known as transfer payment. Firstly, can anybody tell me what is transfer payment? What is the definition of transfer payment, or what is the example of the transfer payment?
Ma'am, maybe gifts exchanged.
Yeah, the example is right. Gifts are example of transfer payment. But why so? Why we call them as transfer payment? Any idea?
Are the remittances?
Remittances, not precisely we can put, but a better example could be scholarships. It could be gifts. See, transfer payment is basically any payment that we are getting for no economic activity. So, for example, you are making a payment to somebody, and that somebody has not provided any economic activity in return. So, no economic activity in return of the payment is an idea of the transfer payment. For example, you are simply giving 100 to 200 rupees to your friends, but he or she has not provided anything in return. No economic activity, no good, no service has been provided in return. That can be the
Ma'am,
example of.
we can say that like the social security benefits and unemployment benefits, like, and also the freebies.
Yeah, freebies is a transfer payment. In fact, the example of remittances that the person gave is also right, but not in all cases. So even you can write remittances also, gift also, freebies also, scholarship also, but you have to see from case to case basis. The only criteria is there should be no economic activity in return of the payment. Getting it? You are right. The freebies can totally go for the transfer payment. Any doubt till now? So just write few examples of the transfer payment in case there is a MCQ associated with it. We'll start with you guys only. Freebies as a transfer payment, social security as highlighted as a transfer payment. Then we also have unemployment benefits, disability benefits, if any.
Ma'am, I have a one doubt.
Yeah, speaker.
Ma'am, for example, in a budget, we provide a huge amount of addition to the other countries. We can say that also it's covered there.
Pardon, can you repeat? Your voice was breaking in between.
Ma'am, I said ki, for example, during the budget period, we know that we provide a huge amount of package to the other nations, so we can also include it in it.
Yeah, if it is a charitable donation, if it is a donation, we can add. If it is a grant, we can add. But if it is a loan to another country, we cannot add. If it is a grant, we can add. But if it is a loan, we cannot add because loan has to be repaid on a later date. Getting it? But grant doesn't
Yes.
have to be repaid on a later date. So grant is added, loan is not added. If you're giving a loan to another country, no, it's not a transfer payment. It is, it has to be repaid on a future date. In fact, it has to be repaid with the interest on it. Getting it?
Sure, ma'am. Thank you.
Yeah. We can also add various subsidies that the government provide, the scholarships. So there are ample of examples. I think you would have understood the concept of transfer payment simply, where in return you are not getting any economic activity. Now we come to the concept of nominal GDP and the real GDP. You all would have studied in the NCERTs till now that the base year for the calculation of GDP is usually year 11, 12 earlier. Now it has shifted to what is known as. Have you studied that? Have you guys read the NCERT even once? Have you guys read the NCERTs? What happened? No answers. So do remember whenever you will read NCERTs, there the concept of base year is given. Earlier we used to calculate GDP on the basis of the base year of 2011 and 12, but now lately it has been revised to the year 2022 and 2023. Now the idea is, what is base year? We keep studying the idea of base year in NCERTs. What is base year? Base year is any reference year. The prices of this year are used for the calculation of the economic growth of the present year. So base year is any year that is fixed by the government, that the prices of the products of the base year are used as a reference for calculation of the economic growth of the present year. That is known as a base year. Base year can be any year that is set by the government. Earlier, the base year was 2011 and 12, but recently it was revised to the year of 2022 and 2023. So, for example, see, if there is nominal GDP and there is real GDP, how is nominal GDP calculated? If we talk about the current year 2025, how will the nominal GDP of 2025 would be calculated? We take the
Ma'am,
prices of the
ma'am, base year is decided by a year where like prices were in control or like that, like ma'am, where inflation was in control, like
Yeah, it has to be a very stable year where we see
okay,
no major fluctuations, where the prices are stable, where no sudden shocks are there in the economy. For example, when the government decides to choose a base year, it won't choose the year 2015, 16, and 17. Why? There was demonetization in that period. There were GST reforms in that period. So there were certain economic shocks, right? The economy was going through various adjustments. So whenever the government chooses a base year, it is a year that is fixed on the basis of the stability of that year. In that year, we should not have very high inflation also. We should not have recession also. So very stable, simple year is usually chosen as a base year. Okay. But now the base year is
yes, ma'am.
2022 and 2023. So for calculation of nominal GDP, we take the prices of the current year. For example, the current year here is 2025. And we will multiply with whatever the quantity is produced in 2025. For example, let's take the example of TVs. And this is just a hypothetical example. For example, if the price of the TV is around 1000 in 2025 and we have produced 10 quantities of TV, so our GDP calculation would be equivalent to 10,000. So that is how nominal GDP is calculated. We simply take the prices of the current year, the quantity of the current year, we multiply, we get the GDP. But the use of the base year happens in real GDP because the formula for real GDP is the prices of the base year. The base year here is 2022 multiplied by the quantity of the current year, that is 2025. So real GDP is, we take the prices of the base year multiplied by the quantity of the current year. So for example, the price of the TV in the year 2022 was rupees 700. Let's assume that. And the quantity produced was, for example, 11. So our GDP would be 7,700 in real terms. So this is real GDP. This is nominal GDP for the year 2025. Now I want you to observe one thing. despite the fact that in real terms, the quantity, wait, I've taken 2025. Sorry. Sorry, I made a mistake here while explaining. If we are taking the price of 700, the quantity for the year remains the same, 10, and we get the value of 7,000. And now I also want to give you an example. For example, in the year 2022, if we calculate, assume it's in the year 2022, the prices of the TV were 700 as I've highlighted above, but the quantity produced was 11. The GDP in real terms was 7,700, right? Now, if we compare everything, we have the nominal GDP of the year 2025, we have the real GDP of the year 2025, we have the real GDP of the year 2022. So if we compare the value, we see that the real GDP has actually declined from the year 2022 to 2025 from 7,700 to 7,000. Why? Because there has been a decline in the quantities of the TV produced from 11 to 10. However, if we see in nominal terms, this is the GDP of year 2022, but if we see in nominal terms, the GDP has increased to what is known as 10,000. But is this the real picture? This value of nominal GDP has increased merely because the prices have increased from 700 to 1,000. But there is no change, or there is in fact a decline in the quantity by 1 unit. So that is why it is often said that the real GDP of a country shows the true picture of the economy, shows the growth in true terms, because it takes into account the increase in the prices and reflects the actual increase in the quantity of the product. However, nominal GDP, despite increasing in terms of the value, is not a true picture, because in actual terms, the quantity or the units of the item produced have decreased, but merely because the price of the item has increased, so value of nominal GDP is high. So it doesn't show the true picture of the production in the economy. So these are the two things that you need to know, that there is an idea of nominal GDP, there is an idea of real GDP. Nominal GDP is simply taking the prices of the current year into the quantity of the current year. Real GDP is you take the prices of the base year into the quantity of the current year. So basically, real GDP shows the true economic growth because it accounts for inflation. It is adjusted for the inflation. But nominal GDP is not adjusted for the inflation, and thereby the value we get in the nominal GDP also includes the rise in the prices and doesn't reflect the true picture. Is anyone having doubt in these two particular concepts? Because for the first timers, it becomes really difficult to understand the concept of nominal and real GDP. So in case you're having any doubt, ask right now. I'll repeat it again.
Ma'am, for 2022, you have multiplied it by 11, ma'am. Like, can you just explain it once more?
Yeah, see. Okay, let's do it in a box. It will be better understood. This is the year 2022. Okay. This is the year 2025. This is the quantity produced. This is the price. I'm assuming in the year 2022, we were producing more TVs. We were producing 11 TVs. But now in this particular year, for whatever reason, we have just produced 10 TVs. So there is a decline in the items or the number of units of the TV produced, right? We can clearly see that. However, the prices of the commodity were 700 in the 2022, but now it is 1,000. Is this picture clear? Are you able to get this table right now?
Yes, ma'am. Understood.
Yeah. But now if we calculate the nominal GDP for the year 2025, what is the formula? We take the prices for the current year, we take the quantity for the current year. It is 10,000. If we calculate the real GDP for the year 2025, what do we do for real GDP? We take the quantity of the current year. We take the price of
Price
what
of
is known as the base year. Getting
base
it?
year, ma'am. Yes, ma'am.
It is 7,000, right? And if we do it for 2022, normally if we calculate nominal GDP or real GDP for 2022, see in 2022, nominal GDP and real GDP would be the same. Why? Because it is the base year. Getting it? For any base year, you are going to take the price of that year only. Are you able to get this concept for 2022? The nominal GDP and real GDP would be the same. If we
Yes, ma'am.
select any base year, the nominal and real GDP tend to be the same because you're taking the prices of the current year for the calculation of nominal GDP, that is 2022. And for the calculation of real GDP of 2022, you are taking the prices of the base year, that is also 2022, right? So if we calculate either nominal or real GDP for 2022, it is simply the quantity into the prices, that is 7,700. Now if we have to make a comparison, अगर हम ट्रू टर्म्स में देखें तो हमारी रियल टर्म्स में जीडीपी कम हुई है क्योंकि प्रोडक्शन में डिक्लाइन आया है बाय 1 यूनिट. बट अगर हम इसी को नॉमिनल टर्म्स में कंपेयर करें तो हमें लगेगा ओ माय गॉड, हमारी कंट्री की तो इकोनॉमिक ग्रोथ बढ़ी है. बट ये ट्रू नहीं है. हमारी कंट्री की इकोनॉमिक ग्रोथ नहीं बढ़ी है. हमारा प्रोडक्शन डिक्लाइन हुआ था बट हमारी कंट्री में इन्फ्लेशन था, प्राइसेस बढ़ गए थे 300 रुपए से, इसलिए हमें लगा कि इकोनॉमिक ग्रोथ हुई है. तो जब भी हमें किसी भी कंट्री की ट्रू पिक्चर देखनी होती है, इफ वी वांट टू सी द ट्रू पिक्चर ऑफ इकोनॉमिक ग्रोथ ऑफ एनी नेशन, we should always look at real GDP because it takes into account the inflation that has happened in any economy. As simple as that. अब कोई डाउट है?
नहीं मैम, अब समझ गया.
परफेक्ट. अच्छा, वन मोर आइडिया, इसको करंट से रिलेट करते हैं थोड़ा. यू वुड be reading the newspaper, I hope so. So in nominal GDP terms, the rank of India is 5th. Very important. Do know that if we calculate or if we compare the countries, the various countries that exist today, then in nominal GDP terms, the India lies at 5th position. And again, there are very important headline in the newspaper. Make a note of it. However, if we talk about the idea of GDP in real terms, somebody would ask what is the rank of India in real GDP terms. There is no ranking of countries in GDP real terms. Real GDP is mainly used to measure the economic growth of the nation over a period of time. It is not used for comparison purposes. For comparison purposes between the nations, usually nominal GDP is used, in which we are 5th at rank. Other than this, GDP in real terms, nominal GDP, there is also one concept of GDP per capita. Can anybody tell me the concept of GDP per capita and what is the rank of India in GDP per capita terms?
Divided by population.
Can you be a bit louder?
Per capita means divided by population.
Right. The formula is right. She has told that GDP per capita is simply GDP upon the population of the nation. Now, can you also tell me the rank of India in GDP per capita terms?
No, ma'am.
Anybody who wants to make a guess? Just a guess would suffice. I want to see how much idea do you guys have about GDP per capita, everything. Any guess? Anyone? Okay, so let me tell you. In per capita terms, India is close to the rank of 139th nation. Why are we so behind when in nominal terms we were in the 5th rank? The reason is the massive population of India. We have a very huge population. So what happens in the formula? If we divide the GDP by the population, basic math, the denominator is very large in this calculation. So as a result, the whole value becomes such that we are reduced massively on the rank of GDP per capita, and we are 139th in GDP per capita rank. That's why also you would have read that India is a low middle income country. Often in the newspaper it is highlighted that we are a low middle income country in terms of GDP per capita. The reason is this only. In India, I don't remember the exact figure, but if we see the GDP per capita in India is close to 2,900. That is quite low if we compare from developed and developing countries like Japan, US, European nations. So we have understood the concept of nominal GDP. That was the quantity of the current year into the price of the current year. Inflation was not adjusted in it. Our rank in nominal GDP terms is fifth. We understood the concept of real GDP, where we multiply the quantity of the current year into the price of the base year. We also refer to the base year as a constant year. So you would read in some books like in the real GDP terms, quantity of the current year into the price of the constant year or the base year. So base year, constant year would be the same thing. And inflation is adjusted in the real GDP, and real GDP shows the true economic growth of the nation. And GDP per capita is nothing but you take the GDP of the nation divided by the population, and in that terms, we are a low middle income country with 139th rank. Now, I think some of you would be getting the doubt that we keep reading in newspaper that in GDP terms, India lies third in rank. What is this GDP? This GDP, where we lie third in the rank, is actually GDP at purchasing power parity terms. This is a concept that we will read in the BOP chapter, but GDP at purchasing power parity is altogether a very different concept, and in that we lie in the third rank. So don't confuse this concept with GDP in nominal terms. In GDP nominal terms, we are fifth in rank. In GDP PPP terms, we are third in rank. PPP means purchasing power parity. Now, we are moving to a new concept, that is GDP deflator. What is GDP deflator? GDP deflator is nothing but it is a measure of inflation. It measures the inflation in the country. How? The formula of GDP deflator is nothing but the nominal GDP of a country upon the real GDP of the country into 100. So if I put the formulas here. So if I put the formulas here, we would know that nominal GDP was what? Prices of the current year, that is 2025, into quantity of the current year, that is also 2025, upon real GDP, that is prices of the base year 2022, into the quantity of the current year, that is 2025, into 100. Now, if we see this formula, the quantity here is same, the quantity here is same. So what this formula is actually calculating, the changes in the prices, because the changes here. Price is the variable factor in this formula. So GDP deflator reflects the inflation in the economy. It is a measure of inflation in the economy because the variable factor, the thing that is varying in the numerator and denominator, is the prices. So do remember what is GDP deflator. Again, can be a direct hit. It is a measure of inflation. It is based upon the nominal GDP upon the real GDP, because in the nominal and real GDP of a particular year, the quantity remains constant. For example, nominal GDP and the real GDP of the year 2025 will have the same quantity. The only variation would be the prices. So GDP deflator is a true picture of the changes in the prices. You would have studied about CPI, WPI, I think in other chapters, that is consumer price index, that measures the inflation at the at the level of the consumer goods. The wholesale price index, I think you would have studied those concepts. So CPI, so GDP deflator is on the same lines like CPI and WPI, but it is more comprehensive. For example, the CPI, consumer price index, used to measure the changes in the prices for a fixed basket of goods and services, right? It used to measure for both goods and services, but there was a fixed basket of goods and services. But in GDP deflator, there is no fixed basket. It is taking into account the price changes for all the commodities that are being produced in the domestic territory. Do you remember we studied GDP where the word D was domestic territory, where we saw whatever the production is taking place in political frontiers, territorial waters, then in the embassies, consulates, etc., etc. So here D was domestic. So any production that is taking place in domestic territory, any good or service being produced in domestic territory, that is taken into account in GDP deflator. We see the price changes for that particular product or services, whereas CPI or WPI was limited to a fixed basket that was delineated. Any doubts till now, please feel free to ask.
Not understand WPL CPH.
You are not audible.
Ma'am, I did not understand WPI CPI terms.
Okay, CPI and WPI are not the concepts of this chapter. They are of another chapter that I assumed you guys would have studied. We will be covering that on a later date. CPI and WPI are not the concepts that need to be covered here. The basic idea is CPI and WPI are used in order to measure inflation in the nation. They are indexes. They measure the inflation of the price changes that is taking place in an economy. CPI is for consumer goods and WPI is for wholesale goods. But this is altogether a different theme that we will cover in the chapter of inflation. Okay, I was making a comparison for the people who would have read the following concepts. Getting it? Is that clear?
Yes, ma'am. Yes, ma'am.
Perfect. We will be covering these concepts in the chapter of inflation, but only for the people who would have read the NCERT once or economics once. I was telling them how GDP deflator is a better indicator of inflation than CPI or WPI, because in CPI and WPI we have a fixed basket of commodities. But here we take into account all the goods and services that are being produced in the domestic territory of the nation. So whenever a question is given, which is the most comprehensive measure of inflation, it is always GDP deflator. Okay. Now we come to the concept of gross national product. How GNP is different from GDP? Very important. Firstly, the definition. GNP is again the total market value, the same as GDP, of the final goods and services that are being produced by the normal residents. So this is where the difference lies, within any specified period of time. See, now what is the difference between GDP and GNP? In GDP, we were concerned where the production is taking place. We were focusing over the word domestic territory, that any good or service that is produced within the domestic territory will be taken into account for the calculation of the GDP. But GNP is concerned with who is producing the item. It is not concerned about where the production is taking place, but who is producing the item. If normal residents of India are producing the goods and services, it will be taken into account in the gross national product, despite the fact that wherever the product is being produced, in whichever nation the product or service is being produced, it is not a matter of concern. The only concern is who is producing it. So if I have to make a difference between the GDP and GNP, both the things take into account the market value of final goods and services of a specified period of time. But GDP is concerned about where the production is taking place. It takes into account the production taking place in domestic territory only. and we have very precisely defined the domestic territory. And GNP is concerned about who is producing the items. It doesn't care about where the production is taking place. It takes into account if anything is being produced by the Indian residents. So while calculating the GNP of India, if anything is produced by Indian residents, even if the item is produced in USA, China, Japan, Korea, wherever, if it is being produced by the Indian residents, it will be taken into account into Indian GNP. So GDP is much more a concept of where, and GNP is a much more a concept of who is producing the item. Now, if I have to explain it, how? Okay, let me ask you a question. Okay, if an Indian resident is producing shirts in USA, will it be taken account into India's GDP? First answer me this and then answer me will it will be taken into account into India's GNP. So these are the first, yeah.
Ma'am, GNP.
Considered.
Perfect. Perfect. I hope the ones who have answered it, obviously their concepts are clear, but the ones who haven't would have understood it because these shirts are being produced by the Indian residents in the USA. It will be taken into account into India's GNP, but not in GDP because USA is not a part of the domestic territory of India. Okay, one more question. Indian embassies contribution in the Japanese nation or in Japan, would it be part of India's GDP?
Yes, ma'am.
Yes, ma'am.
Perfect.
It's India's territory.
Perfect. Great. Now we will move ahead. Now a major question is, how can we move from GDP to GNP? Both are gross. Here the difference is only domestic, here the difference is national and product. So in order to move from GDP to GNP, we add NFIA, net factor income from abroad, to GDP in order to derive GNP. Now, what is this net factor income from abroad? Net factor income from abroad is nothing but whatever income that is earned by the Indian residents. Income earned by Indian residents from abroad minus whatever the income is earned by the non-residents in India. So this is net factor income from abroad. Net factor income from abroad कुछ नहीं है, ये देखता है कि जो हमारे इंडियन रेजिडेंट्स हैं वो बाकी देशों से जो भी इनकम अर्न कर रहे हैं उसकी वैल्यू में से हम डिडक्ट कर देंगे जो बाहर के रेजिडेंट्स हैं जो इंडिया से इनकम अर्न कर रहे हैं उस वैल्यू को, दैट इज नोन एज नेट फैक्टर इनकम फ्रॉम अब्रॉड. तो कभी भी हमें अगर जीडीपी की वैल्यू गिवन है और हमें कैलकुलेट करना है उससे जीएनपी, तो जीडीपी में हम सिंपली ऐड कर देंगे नेट फैक्टर इनकम फ्रॉम अब्रॉड और हमारे पास वैल्यू आ जाएगी ग्रॉस नेशनल प्रोडक्ट की. और नेट फैक्टर इनकम फ्रॉम अब्रॉड कुछ नहीं है, जो हमारी कंट्री के रेजिडेंट्स बाहर के देशों से इनकम अर्न कर रहे हैं उसमें से हम डिडक्ट कर देंगे वो वैल्यू जो बाहर के रेजिडेंट्स हमारी कंट्री में इनकम अर्न कर रहे हैं. इसको सिंप्लीफाई करना है तो जो हमारे आईटी के रेजिडेंट्स यूएस में बैठे हैं वो अगर इन टोटल 1 CR अर्न कर रहे हैं बहुत सारे नेशन से, यूएस से अर्न कर रहे हैं, जापान से अर्न कर रहे हैं, चाइना, यूरोप, हर जगह से अर्न करके टोटल में 1 CR ला रहे हैं. अगेन इट्स अ वेरी हाइपोथेटिकल फिगर, बहुत बड़ी वैल्यूज होती हैं यहाँ पे. 1 करोड़ इज अ वेरी स्मॉल अमाउंट. It's not even 0.5% of the actual amount. तो अगर इंडियन रेजिडेंट्स बाहर के सारे नेशन से 1 CR अर्न कर रहे हैं, माइनस अगर बाहर के कंट्री के लोग हमारी इंडिया में काम करके अप्रोक्सीमेटली 50 लाख रुपीस अर्न कर रहे हैं, अमेरिकन्स, चाइनीज, अफ्रीकन्स, फॉर दैट मैटर, द पीपल की वैल्यू 50 लाख हो जाएगी कि जो भी इंडियंस ने, या am I audible now?
Yes,
Yes,
ma'am. Now.
ma'am, बीच में कट गया
Am
था
I
वही
audible to
से।
everyone?
Yes,
Can you
ma'am. But
tell
in
me
the middle, it was
from where I have to explain again? Can you tell me?
Just from the start of this
this.
example.
Yes, ma'am. This example which you were explaining.
1
Okay.
crore.
From the example? Okay, just wait. Okay, let's go back to the example once again. So my example was, let's assume that there are many Indian residents who are working outside our nation. They are working in US, China, America, Africa, Bangladesh, Vietnam, everywhere. And altogether, they are able to earn the income of 1 CR. ये hypothetical figure है. And इसमें से हम डिडक्ट करेंगे जो भी बाहर के रेजिडेंट्स हैं जो हमारी कंट्री में काम कर रहे हैं और वो जो इंडिया से इनकम अर्न कर रहे हैं. फॉर एग्जाम्पल, द समेशन ऑफ ऑल द इनकम अर्न बाय देम इज 50 lakhs. तो हमारा नेट फैक्टर इनकम फ्रॉम अब्रॉड क्या हो जाएगा? ₹50 lakhs. एक्चुअल फिगर्स नहीं है ये, हाइपोथेटिकल फिगर्स हैं. एक्चुअल फिगर्स बहुत बड़े होते हैं, दे आर इन थाउजेंड्स ऑफ करोड्स. So you don't have to worry about them. You never have to also learn them. You just need to understand the concept कि GDP plus the net factor income from abroad gives us gross national product, and net factor income from abroad is nothing but whatever is the income earned by the Indian residents from abroad minus the income earned by the non-residents from India. As simple as that. Even if you're not able to holistically understand the concept, do remember, आप इसको 2 से 3 बार रिवाइज करोगे तो चीजें क्लियर होने लगेगी. You are understanding the concept of GDP and GNP for the first time, and it tends to be the most complex area in the economics where people get a lot of doubts because of lot of formulas and new terms, but it is okay. पहले सुनो, नोट्स बनाओ, उसको 2-3 बार रिवाइज करोगे तो चीजें क्लियर हो जाएंगी. So this was the concept of GDP and GNP. Now we will cover one more concept, that is depreciation. Now, what is the concept of depreciation? Depreciation simply refers to the wear and tear losses. For example, आज आपने अपने बिजनेस के लिए कोई भी मशीन ली है. ओवर अ पीरियड ऑफ टाइम ये मशीन आउटडेटेड हो जाएगी, ये मशीन खराब होने लग जाएगी, इस मशीन की प्रोडक्टिविटी रिड्यूस हो जाएगी, ये ऑब्सोलीट हो जाएगी, राइट? तो उस चीज को काउंट करने को डेप्रिसिएशन कहते हैं. सो डेप्रिसिएशन सिंपली रेफर्स टू द वियर एंड द टियर लॉसेस ऑफ द कैपिटल गुड्स. फॉर एग्जाम्पल, आप मान लो देयर इज अ टेक्सटाइल मिल दैट हैज in the year 2025 invested into 10 machines. But in 2026, out of these 10 machines, the 9 are working efficiently, but one faces any issue per se, whatever issue it is, and it becomes ineffective, or the productivity reduces or something like that. So here, over a year, the depreciation is equal to one machine. This is in order to explain you, depreciation is usually calculated in monetary terms for accounting purposes. The people who are coming from a commerce background already know the concept of depreciation, that whenever we prepare the balance sheet, whenever we calculate the values of the machines, we account for the depreciation, and that is shown in the monetary terms, monetary value. So depreciation is nothing but whatever the degradation is there, whatever the wear and tear losses are there in the machines, that is known as depreciation. Now, why we are talking about depreciation? we are talking about depreciation because in I think starting of the class, I have told you gross domestic product, where I was telling you about gross, that gross is a wholesome value and no depreciation value is deducted from it. But the minute we deduct the depreciation value from the gross value, we get net. So gross minus depreciation is equal to net. Very important formula, do remember. So for example, if there is gross domestic product and I need to calculate net domestic product from that. So I simply have to deduct depreciation from GDP. Here the depreciation would be the monetary value of all the degradation of all the machines that have happened in the nation over a period of time, and then we will come in derive the value of NDP from that. So depreciation, when deducted from gross, we get the value of net. And depreciation is very central to the idea of accounting, where we always account that what has been the reduction in the value of the machines. And this concept will also be used later in order to understand the idea of capital formation. So whenever we talk about capital formation, we take the true picture of the investments in a nation. So later when I'll be explaining you the concept of capital formation, we will again see the concept of depreciation. Now, we have understood the concept of GDP, depreciation, GNP, everything. Now, do remember there are three methods to calculate the GDP of a nation. To calculate this gross domestic product, we have three methods. One is expenditure method. So first is expenditure method. The second is what is known as income method. And the third is value added method. So there are three methods that are used by various nations in order to calculate the GDP of the nation. One is expenditure method, one is income method, one is value added method. Now, what is expenditure method? Expenditure method calculates GDP by simply seeing what is the expenditure of everyone in the nation on the final goods and services produced. For example, if I have to calculate GDP by expenditure method, we know we as consumers spend a lot of money on consumption. You, me, I, everyone, right? So, consumption expenditure, the abbreviation for it is C. Then there is the private sector, the firms. They do a lot of expenditure over machinery, over the capital goods. That can be referred to as I, that is investments. This is done by the private sector. It is again an expenditure. Then comes government. Government does a lot of expenditure, either on the consumer goods or on the capital goods, right? So government is again a very important contributor to the GDP of the nation because of its expenditure. So whatever expenditure the government tends to do, it is reflected by the abbreviation G. So do remember the expenditure by the consumers, C, the expenditure by the firms, I, investment, the expenditure by the government, G. And then we know that within a nation, we have understood the concept of GDP. We only account for the goods that are produced in the domestic territory. Right. So this implies that we will account for the goods that we are sending from, that we are producing in India, that we are also sending to other nations for consumption, that is exports. But we will not take into account the goods that are being produced outside our domestic territory, yet they're consumed in our nations. That is imports. For example, you would have seen in today's date, we are using a lot of air purifiers. A lot of air purifiers are not produced in the India. We are consuming air purifiers, but they're not produced in the India. They're not a production of the or they're not part of the production in the domestic territory of India. They are being produced in nations like Japan, China, and we're importing them. So they would be deducted from the GDP of the nation, because GDP is only about those goods and services that are produced within the domestic territory of the India. So as I've given you the example, air purifier, though being consumed by the Indians, though being consumed by the Indian residents, however, they're not produced in India, and thereby they need to be subtracted from the GDP. But if we talk about spices, spices are produced in the domestic territory of the India, right? And we also provide these spices to various other nations. We export a lot of spices. We export a lot of makhanas. We export a lot of marine products. We export a lot of rice. All those things are produced in the domestic territory but are being consumed by the residents of the other nations. But since they are being produced in our domestic territory, they will be a part of our GDP. So now, if I have to tell you the formula of the GDP, it was the consumption expenditure, the investment expenditure by the firms, the government expenditure, plus the exports. The abbreviation for the exports is X, minus the imports. And M is used as the abbreviation of imports. So the formula for the calculation of GDP by the expenditure method is consumption plus investment plus government expenditure, plus this whole thing is known as net exports. So consumption plus investment plus government expenditure plus net exports is the formula of GDP. We take into account consumption, we take account into investment, we take account into government expenditure, we take account into exports, we deduct the imports because imports are not produced within our national boundaries. Exports are produced within our domestic boundary and some other person consumes it, a non-resident consumes it, and this ultimately results into formula of GDP by the expenditure method. And this X minus M is known as net exports, also written as NX. So this is how GDP is calculated by expenditure method. Now, if we have to make current linkage in terms of Indian economy based on economic survey, do remember economic survey has highlighted that consumption expenditure accounts for 61% of India's GDP. We are a consumption driven nation, and now out of our entire GDP, the 100% GDP or 100% value of the GDP we have, 61% is coming from the consumption expenditure, 31% is coming from investment expenditure, government expenditure is close to 10%. Now you would be thinking that we have already crossed 100%. But the reason is our net exports, that is the value of exports minus imports, is 22% minus 24%. It is negative 2%. So we are a net importer nation. That implies the quantity of the goods and services we export, the value of the same is less than the goods and services that we import. So we are a net importer of goods and services, and that's why the NX value that we get is minus 2%. It is 22 minus 24%. So I think the GDP by expenditure method would be clear. Simply add the consumption expenditure and investment expenditure and government expenditure and the net exports. Net exports is nothing but exports minus the imports, which is negative in the case of India. And the highest value in the GDP is of consumption in case of India, because we are a consumption driven economy. Now I think we have done a number of concepts for today, but yet a lot of portion of GDP is left, and we can continue the same for tomorrow's class. I don't want to stretch the class further because it would become a lot tedious for a number of people who are studying for the first time. So I will try to cover all the remaining concepts that we have in tomorrow's class. In case you are having any doubts, feel free to speak up.
Ma'am,
Yeah.
ma'am, in the case of pension and the scholarship, we are not included in the expenditure method.
No, transfer payments are not included in GDP calculation.
Okay.
Okay, let me reiterate. Any transfer payment that is one-sided payment, payment made by one person to another person, one entity to another entity, where there is no economic activity involved in return of the payment. It is not calculated in GDP calculation. It is not used in GDP calculation. So no transfer payment whatsoever is calculated in GDP calculation. Any grant that the Indian government gives to another nation, any freebies that the Indian government gives to the peoples are not included in the GDP of the country because they are transfer payments. Is that clear?
Yes, ma'am.
Perfect. Any more doubts? So I think we are done for today. I would like to highlight a mistake that was there in Saturday's class, though I have highlighted in the group also. But in order to make sure that no student has any doubt with the concept or goes wrong in any concept, do remember that whenever we talk about elastic and inelastic goods, the whenever we talk about elastic and inelastic goods, the one we did with the formula, that is the change in the quantity demanded of a product upon the change in the price of the product, that how the demand of a product reacts to the changes in the price of the product. Have you revised that concept again?
Yes, ma'am.
Yeah, so what are elastic goods? So what are elastic goods? That's a question that I'm asking you.
Elastic goods are usually the luxury goods in which whose price increase or decrease, the purchasing class are still able to buy it because the price increase and decrease doesn't matter to them.
Yeah, so example of elastic goods is actually luxury goods that I wanted to correct. And I did leave a voice note also. So do remember that luxury items, the electronics, all will be a part of the elastic goods, the airline tickets, the cards that we buy, the consumer electronics. All these are example of simply the elastic goods because the change in the demand would be a lot more than the change in the prices in such products. So this was a correction that I wanted to make. Other than that, we are good to go. Just revise your class today. And we will cover the remaining chapter in tomorrow's class. And thank you, everyone. Thank you so much.
Thank you, ma'am.
Thank
You're
you.
welcome.
Thank you, ma'am.
You're welcome, guys. Study hard and let's meet again at 1.